Hello and welcome to this week's show. Thanks so much for joining us today. I'm your host Trey Winowitz and you're watching Right on the Money. Our goal for the show is to always equip you, the viewer, with accurate financial information so you can make educated decisions for both you and your family. Now we've got a great show lined up for you today, so thanks for watching. We're going to be tackling some difficult financial questions, and we want to take some things that could be somewhat complicated and make them simple and easy to understand. So come on in and have some fun with us today.
In the aftermath of Hurricane Katrina, Trey Winowitz was forced to move himself and his family over 600 miles north and begin his financial planning practice again, from scratch. Since then, Winowitz Financial has become a national success story, establishing itself as a trusted source for financial advice in and around East Tennessee. In return, Trey gives back to the community by sponsoring monthly educational workshops and annual charity events. He also hosts a weekly radio show informing and entertaining those in need of financial advice. So, if you'd like to understand more about today's challenging financial environment, if you'd like to overcome your current financial situation, and want to learn from someone with a track record of overcoming, stay tuned for some trusted financial advice that's right on the money.
Now let's get to today's main topic, the facts versus the fiction of life insurance. I can't tell you how many people come into my office each week after attending one of our monthly seminars, hearing our radio show, or even watching this TV show that want me to help them understand their life insurance. Some of you watching the show today will benefit from this show because you currently own life insurance, but maybe you're paying too much for it and you don't know it. Some of you out there have been putting off buying life insurance because it confuses you when one person tells you to buy one kind and someone else tells you to buy another. I want to help all of you. Depending on your stage of life, you may need to consider purchasing life insurance, or you may already own life insurance. One of the main reasons people buy life insurance is to protect their family in the case of a premature death. Having some money come into a situation to help pay off some debt or replace some income, especially if there's a loved one that's passed away, is a very important thing. On the other hand, being afraid of the what-ifs in life can sometimes lead a consumer into buying something that may not be the best thing for them. That's why today I want to answer some of the most common questions that I get in my office about life insurance. So on today's show, we're going to talk about how to determine the need for life insurance, all the different types of life insurance, how life insurance is priced, and how you could possibly save some money. Then we're going to cover the top 5 mistakes that people make when they buy life insurance. While there are many ways that people use to determine the need, the easiest is to add up the debts that you have and then add to that any number of events that you would have saved money for. For instance, the kids' college, retirement nest egg maybe, and then maybe finally consider some of your income that you'd like to replace for your family. Most experts say that you should own 6 to 10 times of income of life insurance, especially when you're the primary income earner and you want to give your family a fighting chance. By the way, we've got a special giveaway for you today. It's a series of white papers called The Truth About Life Insurance. But what I'd like to do is use the rest of the show today to talk about life insurance from an educational perspective. Coming up after the break, I'll cover the different types of life insurance, which is one of the most confusing things for many people. Stick around for more trusted advice that's right on the money.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Thanks for joining us again. I'm your host Trey Winowitz and you're watching Right on the Money. And today we're talking about the facts versus the fiction of life insurance. If you missed the first part of the show, please make sure you visit my website, treyw.tv. There you can watch the show or listen to our past radio shows and post questions. Now, back to the main topic. People are often confused about the different types of life insurance, which brings us to the next point for today's show. What type of life insurance do you need to own? Some insurance is very, very cheap and some cost more money. Why is that? Are you any more likely to die if you own term or whole life insurance? Nope. From a statistical point of view, the odds are exactly the same. So why the discrepancy in cost? It all boils down to how much risk the insurance company is taking. Life insurance falls into two main categories: protection or temporary policies, which provide a specific benefit in a lump sum payment. The common form of this is term insurance. You can buy term insurance for 1 year, 5 years, 10, 20, or even 30 years. And then there are investment or permanent policies where the main objective is to accumulate cash while protecting you. Common forms here would be whole life, universal, and variable life policies. Since the odds of you dying are statistically the same, the difference in price comes from how long the coverage is guaranteed to pay a claim. In a properly funded permanent policy, no matter how long you live, the insurance company has to pay a death claim. So the cost of insurance is mainly calculated based on the company collecting premiums until your life expectancy. Now obviously they'd make a return on those premiums while they use the money so that when you were supposed to die, they had at least the amount of the death benefit. Now here's some interesting statistics. According to a study in 1993, Penn State University studied 20,000 life insurance policies, term. They paid out a death claim in less than 1% of the time. That's why they're so cheap to purchase. You're statistically either going to cancel them, drop them, or outlive them. But with a permanent insurance policy, on the other hand, they're set up to generate a cash value, and by overpaying the premiums into the policy, the cash value builds up. It then grows according to the type of policy. Universal life traditionally is tied to an interest rate factor. They made a great run in the 70s and 80s when we had very high inflation. Variable life has sub-accounts like mutual funds. Consequently, this was very popular during the bull market of the late 80s and 90s. In traditional whole life, this cash value generally is tied to a declared dividend rate of the insurance company. So you'll want to check out the company's historical track record of dividend. If you give us a call at the office, I can help you do that. Just to be clear, despite what you may hear or read, there isn't a bad or good type of life insurance. It's all different and used for different reasons. Picking the right type can be very confusing, and if you want to make sure that you have the right type, talk with a qualified professional to figure out what your individual needs are. We give second opinions all the time, and frequently the type of insurance you have may get the job done, but it might not be the best fit. After the next break, we'll talk about how life insurance is priced and how you could potentially save some money on it. We'll then talk about the top 5 mistakes that people make when they buy life insurance. You won't want to miss the next segment. Stay tuned for more trusted advice that's right on the money.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
And we're back. I'm your host, Trey Winowitz, and you're watching Right on the Money. Today, we're talking about the facts versus the fiction of life insurance. If you missed the first part of the show, visit our website at treyw.tv, where you can watch the whole show, listen to our radio show, and you can even post financial questions. There are always some special offers for our viewing audience there as well. In the last segment, we learned that insurance companies price their life insurance based on the risks that they're taking. This turns into a variety of different types and lengths of insurance. When qualifying for an insurance policy, a physical is generally required to rank your health against others your age. Yes, that's right, life insurance is discriminatory. Many companies separate applicants into 4 categories. These categories are preferred best, preferred, standard, and tobacco. The best category is reserved for only the healthiest individuals. This means that the proposed insured had no adverse medical history or is under no medications of any kind. His family also has a clean medical history. The preferred category means that the proposed insured could be under currently a minor medication or have a minor condition that may have a family history, but the applicant is in better than average health. Most people, however, are in the standard category.
What about me, Trey?
Oh yeah, and of course, there are separate classes for tobacco use. It's actually different from smokeless tobacco use. But as you can imagine, there's an additional risk to the company for that claim, so the rates are higher. Other factors are also evaluated by the insurance company that most people wouldn't think affect their rates, like profession, travel history, lifestyle, and weight in relation to height. Also, the family medical history. The underwriting practices can vary from insurers, which encourages competition. This is why my best advice is to call someone knowledgeable and independent, which means they don't work for an insurance company. There are literally hundreds of insurance companies out there, and certain companies could be cheaper for different people. I want to wrap up our discussion of life insurance with the top 5 mistakes that people make when purchasing life insurance. Number 1, not having enough coverage. Guys, don't be a cheapskate. Have at least 8 to 10 times your salary, especially if you have kids. I've never delivered a life insurance check to a widow that's complained about it being too much money. Number 2, not having the right kind of coverage. Come in, get a review, along with any other investments or annuities. We do this all the time and it costs you nothing, but sometimes it can save you a lot of money. Number 3, not working with an independent agent. If you go to a Ford dealership, they're not going to tell you about the Chevrolets, which might be a good fit. It's the same way with insurance. Come to my office or an independent agent and they can shop the best A-rated carriers for the best price, not just a price. Don't pay too much for your life insurance. Bundled coverage is a cable package, not for your family's protection. And lastly, procrastination. If you're thinking to yourself, hey, I just haven't been able to get around to it. Life insurance are at historically low rates. You owe it to your family to make sure you're paying the least premium possible. We help people refinance their life insurance every week. Why not see if you can save some money? Coming up next, see how people just like you benefited from a second opinion that cost them nothing. Don't miss our Money Matters segment and stay tuned for advice that's right on the money.
Are you looking to recruit and retain great employees? Would you like to reduce your retirement plan cost? Now you can offer employees the opportunity to keep their retirement funds protected and growing. Separate yourself from your competition. Make a difference in the retirement of your employees with little to no additional cost to you and no change to your TPA, payroll, or existing 401k company. Call Winowitz Financial today to find out more about this exciting new product.
I don't know about you, but what's been going on in the U.S. economy, and especially Europe, scares me. There are too many things that we can't control affecting our investments. We have to do our best to educate ourselves about the best options out there to protect our nest eggs. The best way to do that is to call Winowitz Financial and reserve a seat at their next free educational workshop. There's usually a waiting list for these, so call today to reserve your seat. 691-2433. That's 691-2433.
Now that we're back, I'd like to tell you about some real-life folks that you may can relate to, because it never hurts to have an extra pair of objective eyes take a look at your situation and see what can be improved. Even if strategies that you're using can't be improved on, sometimes people say it's a huge comfort when I tell them that what they're doing is working well, or maybe they should continue on the same path. However, in some cases we discover that some of the products or strategies they thought worked in a certain way actually don't. And sometimes not getting a second opinion can be very costly. If you want to be a part of this Money Matters segment, please give us a call at the office for a complimentary review. As you'll see, everything's kept confidential, but your situation may help some of our other viewers secure their financial future. So give me a call and maybe your case will get picked for the show. I want to take a second to introduce you to a few people who came in the office recently for a no obligation second opinion, just to be sure. And these people were glad that they did. So let's take a look at this week's case. Hey Janet, can you bring me my notes? Thanks. All right. Today's case study involves a 39-year-old husband in sales and a wife, 42, who's a dental hygienist. They have 2 children, 8 and 11, and they're from Loudon, Tennessee. These folks called in for a meeting after watching our television show that you're watching today. So their main concerns when they came in to see me was, do they have enough life insurance was one of theirs. The other thing is, with all of the talk about refinancing and mortgage rates, they had a mortgage that was a 5.75 interest rate, and they weren't sure if it made sense to refinance their mortgage or not. Lastly, both had old 401ks from previous employers, and they were wondering if they should roll those over or kind of leave them where they were. So what we went through, our steps to success, we shopped their insurance, as we do a lot of times. Being independent, we shopped them with a lot of A-rated carriers to see if we could get them any better rates or maybe some longer guarantees on their life insurance. Secondly, we got in touch with our trusted mortgage professional. We actually have one in-house, and anybody who wants to talk with them, you get a friends and family discount on closing cost. But they did a comparison with the mortgage person to compare their current mortgage and also analyze different options with new interest rates and different terms. Lastly, we compared some investment choices with their old 401ks to try to find some safer options and add some guarantees to their plan for retirement. Results. We were actually able to get them both $100,000 more life insurance and keep their premiums exactly the same. So it really paid off to shop those life insurance rates with today's new mortality tables. Secondly, we helped them choose, after analyzing their refinance option, we helped them choose between a different refinance option, lowered their mortgage rate, and helped them save over $100,000 in interest over the life of their loan. Lastly, we helped look at some different no-fee alternatives for their IRAs that had some guarantees to them so that when they get ready to retire, they'll have some money that they can count on for the rest of their lives. Give us a call today for a complimentary review, and if your scenario gets picked for the show, you're going to receive a Right on the Money prize pack. But most of all, we want to help you. Coming up next, another opportunity for you to be a part of the show. Post it on our Facebook, tweet us, or email us your financial questions, and stick around for the viewer mail section.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Welcome back to Right on the Money. I'm your host, Trey Winowitz, and it's time for you, the viewer, to be an integral part of this show, Viewer Mail. This is the part of the show where you send us your questions about anything financial. In order to get your questions to me, you can post them on our Facebook page, tweet your question to me at TreyWTV, or email them to me at advice@TreyWTV. If your question happens to get answered for the show, you'll receive a Right on the Money prize pack just for your willingness to help out our other viewers. This package has a retail value of over $50, so please don't stop sending us those questions. Our first viewer mail question today is, how do insurance companies make money? You know, people ask me that all the time, and the fact is, insurance companies usually make money hand over fist, or very well. But seriously, it kind of depends on what products you purchase from them. And in some of their products, they make money just like banks by using your money over time. In other products, they make money like brokerage firms, and they charge you fees. In the cases of insurance, they have people called actuaries that work for them, and actuaries actually calculate based on your age and health how long you're going to live and how long they're going to get to collect your premiums. This is how the products are priced. We work with a lot of different insurance companies for a variety of needs, and I'd be happy to look at anything you're considering and see if we can find it for you, maybe with a different carrier that would be cheaper. That would be life insurance, long-term care insurance, or annuity products. Even better, give us a call at the office and I'll send you a free DVD copy about our show that we did on banks, bonds, and insurance companies that detailed all of the different options and answered a lot of your questions. Thanks a lot for the Facebook post. And our next question is, my employer is offering me pension options. How do I choose among all the different options? You know, that's a great question. That answer depends on a variety of factors, and generally the options that pensions offer are these. There's a lifetime annuity, and during the lifetime annuity option, it generally offers the highest monthly payout. The downside is if you take that option and you die, your family receives nothing. Then there are also a number of survivor options. The pros are, in these options, your spouse can continue with the payment when you pass away, but the downside is your lifetime payment is generally less. Sometimes there's things that you can do to position yourself to take a much higher payout, and also you want to take into consideration other factors that may also play a part in your income and your retirement plan. We take some time and analyze those types of things, help give you the information to make your best decision. Give us a call and we can help you look at this, work through this situation, and help you find a good answer. The last question we have time for today is this: do I need a will? Well, regardless of how much or how little money you have, a will ensures that all your personal belongings and assets will go to the family members or beneficiaries that you designate. Now, without a will, the court makes these decisions. If you have children, a will is a must. It ensures that you get to choose your children's guardian if you were to pass away. Now, few people plan to die in the near future, but if you were to suddenly die without a will, you'd be subjecting your family and loved ones to confusion, anxiety, and already a difficult time. Stick around after this short break for Right on the Street. See what some local people just like you think about the stock market and other financial topics. You may actually see someone that you know.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
Are you looking to recruit and retain great employees? Would you like to reduce your retirement plan cost? Now you can offer employees the opportunity to keep their retirement funds protected and growing. Separate yourself from your competition. Make a difference in the retirement of your employees with little to no additional cost to you and no change to your TPA, payroll, or existing 401k company. Call Winowitz Financial today to find out more about this exciting new product.
And we're back. This is Right on the Money, and I'm Trey Winowitz. See what some local people just like you think about the stock market and other financial topics. You may actually see someone that you know. Life insurance. Do you own life insurance?
Yes.
What type of life
Well,
insurance?
no, I don't got life.
You don't have it. Okay, that's all right. What about life insurance? Do you own life insurance?
Life insurance.
Yeah. Do you own any?
No.
Okay. When do you think somebody should buy life insurance?
Before they die.
Before they die. That's exactly right. When do you think someone should think about owning life insurance?
Well, when they...
Do you own life insurance?
Yes, through work.
Okay. Do you own life insurance?
I have some through work, yes.
Okay. What about life insurance? Do you own life insurance?
A little bit. Okay.
What's your favorite Elvis song?
Favorite Elvis song is My Way.
My Way? Can you sing a little bit of that first?
No, it is near, so I face the final curtain.
When should someone buy life insurance, do you think?
I suspect when they're younger because it's less expensive then and to protect their families.
And when's a good time, do you think, for people to start considering owning life insurance?
As young as possible.
I probably should have started sooner, but I probably started in my 30s.
My friend, I'll say clear, stay my case, of which I'm certain.
Are you more likely to die if you own term life insurance or whole life insurance?
I don't know.
Is one any more likely to die if they own term insurance or whole life insurance?
I wouldn't think so.
Yeah, I agree.
I live, life is full. I traveled each and every highway.
Okay, what kind of life insurance is it?
It's through the university that I work for, so.
Okay. And is that the University of Missouri?
You were good.
Well, you know, I was just going by the tiger.
What, you mean this tiger?
Yeah, that one right there. Almost looks like an LSU tiger.
It almost does.
Why do you think different companies offer more than one type of life insurance?
So you can see what the best life insurance is.
What's long term for you?
Oh, I plan to live to be 140, so probably another 80 years.
Okay, that's pretty long term.
And more, much more than this, I did my highway.
That was awesome. And we're back. This is Right on the Money, and I'm Trey Winowitz. We're just getting ready to wrap up the show, but before we go, I'd like to tell you about an old Louisiana tradition called lagniappe. Lagniappe means to give someone a little something extra, and the way that we want to do that here at Right on the Money is to brighten your day at the end of our show. So with that, here's a little lagniappe for you. Where's my Sunday paper? The irate customer calling the newspaper office shouted into the phone. She demanded to know why her Sunday edition of her paper was missing from the front porch. "Madam," said the newspaper employee, "today's Saturday. The Sunday paper is not delivered till tomorrow, on Sunday." There was a long pause on the other end of the phone, followed by a ray of recognition as the elderly lady was heard to mutter, "Well, shucks, that explains why nobody was at church." And that, my friends, is a little lagniappe for you. I want to personally thank you for watching our show today. I hope you found our show helpful as well as a little bit entertaining. If there's anything at all I can help you with financially, please don't hesitate to call our office. And remember, any plan that we come up with will always have three main goals for your money. Safety first, or protection of your principal, is always number one. Making a reasonable return on your money in what some would consider an unreasonable market. And number three, keeping your plans simple and easy to understand. If that sounds like something you want, I know I can help you. Also, please keep the financial questions coming. We'll do our best to get them answered on the show. I'll see you next week at 3 o'clock for more trusted advice that's right on the money.